Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly look at gold and silver. So we're going to start here on the day time frame in linear scale looking at gold, and we're going to start with our bullish count and then we'll look at the bearish alternative as well. But actually I'll tell you what we'll do, we'll get rid of the count and we'll start with some basic technical analysis first. So I'm just going to bring up our exponential moving averages, our MACD and our RSI. So, and I'm also going to bring up this pitchfork here, okay, because this is our long-term primary pitchfork. And let's just zoom in a bit. So we can see how since August 20 we had this initial move down, and we've spent a lot of time moving sideways, roughly a year from March to March. And we can see during that period we've had a pretty clear triangular consolidation period. A balance of forces, higher lows and lower highs, reflected in price and in our momentum indicators here as well. As we can see, if we take those highs there and we take these lows here, and then that triangle pattern is completed and we've now thrusted higher. So the question is it a thrust higher into a B wave of a correction that is still undergoing? That is a possibility, and that's our bearish count. Or are we done and we're now going higher? Well, unfortunately, we can't be completely sure. I think I'm personally leaning, and I'm going to continue to lean, primarily with the bullish count for the moment until proven otherwise. So looking for a retracement off of this high and then another impulsive move off of that as a potential to set up another trade. In the meantime, just got to be a bit patient, because after all of this consolidation everyone's very eager to go moon now, but it's likely not going to happen like that. So as you can see, this pitchfork here has been very significant in terms of the long-term geometry of the market here. We had the back test of the outer bound here after getting very overbought, hence such a long consolidation period. As we move through these levels, the 61.8 here and the 50, we can see how the moving averages and the geometry are working beautifully together to synchronize support on the way down. So 61.8 golden zone here, 38.2 here, then we stop in the middle of nowhere, but it wasn't the middle of nowhere, it was the 250 exponential moving average to the tick. Come back through these levels, come back to the 250 again, down through here towards the 38.2, back test the median line, back to the 50, and then the zigzag down to this 50, then back to test the median line, back to the 50, back to test the median line, back to the 38.2, up, back to the 38.2, completing that triangle pattern. So working in conjunction between these coiling exponential moving averages, which have all gotten tighter and tighter and tighter until finally going vertical again and now showing signs of accelerating. And yeah, essentially the moving averages and this long-term pitchfork we've been working with. We can see how back into overbought conditions, the strongest reading we've had, I was about to say since May 21, but it is actually the strongest reading we've had since August 20. The same on the MACD here, the most momentum we've managed to produce since August 20. Now it could be a B wave correction. It's not the most convincing strength out of it at the moment, but long-term consolidation rather than coming off of a V bottom caused by a sharp zigzag, the initial mood doesn't tend to be as explosive. If we see like a big leading diagonal structure, the 1 for example, of a deep correction off of that, we often get a very explosive move. Or if we get a deep zigzag off of a 2 into the beginning of a 3, we often get more momentum off of that. This long-term sideways consolidation still broke quite violently, but it hasn't produced extreme momentum conditions yet. But it did make a pretty significant run, and it came straight to the 61.8, sticking its nose through it slightly, and the first test back was straight to the median line, which we basically hung around after breaking it for support. So we're back at support at the moment, and the question is, have we done enough to correct an initial move up in this very short period of time? Are we going to have to see some kind of free wave structure like this before we can continue higher? And I think we should probably err on the side of it taking a little longer. I always tend to err on the side of that. After being sat in this consolidation period for a while, for such a long time, everybody's very impatient and wants to get going to the moon right away, and that is not likely going to be the case. So let's just switch off our pitchfork now, switch off our moving averages, and let's bring up our primary bullish count. So this assumes that the whole thing, we had a rather long A wave, B, C, D, E, and then what I think was a leading diagonal 1, 2, 3, 4 and a 5 into a minor 1. So I will label that minor 1 now. I might want to leave the count up. That's where I think the triangle finished. And I think that's probably the best place for it, because I've managed to use the dominant highs and dominant lows. Okay, I'm not having to truncate the E by sticking it here and explaining this funky doodah move where we don't get a lower low. I'm just taking the dominant lows, and it's still possible to get these zigzag patterns. This isn't a particularly convincing one in the E, but it is there. Okay, I think it's preferable to that. But it could be a WXY in the E, and all of this is a 1. Either way, whether we got a 1 by coming straight up in 5 to here, or whether we got a 1 by having this little diagonal, 3, 4, 5, I think I'm leaning into this for the moment. So, the point I would make is, whether you've taken this as a low or this is the low, this is a more conservative low. Okay, it's 1754. Breaking this, therefore, if this were to come back, this is a guaranteed bullish invalidation of any fresh impulse out of this triangle, because if you were using this low, you have the potential of being wrong and even coming deeper, as unlikely as that would be, before turning around and heading higher. However, if you do take this low, then there's no kidding yourself. If you break this, you've ceased any impulsive move higher, and that's at 1754.48. Actually, it says 4310, so I'm just going to adjust the coordinates of it. 53.10, sorry, excuse me. Not 43. There we go. I'm just going to save the chart now I've done that. Okay, so next question is, if this is a completed wave 1, coming back up to the previous all-time high within a gnat's cock of it, if that's a wave 1, that's a very obvious place to find resistance at the previous all-time high. Okay, so fair enough. What have we retraced thus far? So let's take our E, completion of the E, start of our wave 1. We can see that the first move back has been to the 50. So the 50 Fibonacci retracement here. We bodied every candle above it, we had a slight wick through it. Okay, so that could be enough. That could be a quick zigzag. This could be a 1 and a 2. If that's the case, we will accelerate out of here, and that was a very speedy 1-2. That seems a little too speedy for me. So perhaps we'd have to come into a smaller time frame and see if we can get 5 out of this. It's possible. And you might be looking at 5 into an A, 3 into a B, and then 5 into a C, and bring us to the 61.8, which would backtest previous structural support, what was resistance, and then maybe that could be the start of R3. You come back through the 61.8 and you've got to start having doubts about whether or not this is bullish. Now, I'm not saying it is bearish at that point, but the 50 and the 61.8 should provide strong support, and we've got structural support right around the 60 as well. So let's mark a couple of points of interest here. So let's take the top of the D wave here. This should, in theory, be very strong support if we come back to this. And I'll show you why, because we've got resistance and support operating around this level. So obvious resistance here, yeah, resistance here, and back tested perfectly for support. So if this is going to be 5 and this is going to be 3, then this could be 5 to here, and that would be an ABC, and that would make perfect sense to stop there. And let's just extend that out. Is there anything else other than just the volume, around the volume profile here? But really it's structural because of this previous resistance and this previous support, so we could expect some kind of reaction there. We've just seen that the fib level comes straight to the 61.8 and overlaps that support perfectly. So that's your golden ratio and your structural support here at 18, let's be precise, 1877.15. So a very logical place for support at this price level here. Okay, now we could have bombed here, but that seems a bit too quick for me. Now if we bring up our pitchfork, however, you can see why we've stopped where we've stopped. So you see this diagonal support resistance where we had resistance here, which gives us this high as well. This became support, which also coincided with the median line, and the back test here of the median line as well. So this is an obviously important horizontal resistance prior, which is now horizontal support. We come back to it. If we break through the median line here, we have structural support on the 61.8 here. Do we have anything else yet? Well, we've got the 60 hanging around here. The 250, depending on how long it takes, that could come up to meet us, because we could be 5, 3, 5, and everything could coincide here. Now this is all just talk at the moment. We can't prove any of this. I'm just looking for signs of confluence, multiple layers of support, multiple reasons for something to stop where it should. So that's the bullish count at the moment, and I'm perfectly happy to back this. And I'll remain confident while we remain above this level, 1877. This is, and that golden ratio, which was slightly below it. If we break this support, break that 61.8, and continue to look like we're impulsing down, then at that point I'm going to start to I'm going to downgrade the bullish count, probably in favour of the bearish count. That doesn't necessarily mean the bullish count's no longer correct. It just means the probability of it being correct, having broken both the 50, the 61.8 and structural support, means it's less likely to be correct. That's all. Not by any means impossible. Okay, so now let's have a look at the bearish idea then. So the pitchfork is still absolutely valid to explain this idea as well. In fact, you could argue that there is some evidence to support it better, because if we are not complete in this correction, and we do have a move coming down as a result of a C wave within a flat, that would actually give us a lot more space to operate in going forward in the future. So I'll show you what I mean by that. So here's an idea for the flat. We did have a triangle, but it was a connecting triangle. It was a B wave triangle within a B wave. So you've got this free wave move to here. This is a free wave move with a triangle B in the middle of it, very time consuming, making it look really like a larger wave degree move, when actually it was a B wave, it was a minor wave within a larger intermediate wave B. And from there we are going to expect, if this is the case, a 5 wave move down. Now I've targeted the edge of the pitchfork here just because I think it's a logical place to go. It would bring us back into all this prior structure here. It would complete prior to these lows here though, which would make this a bit of an odd looking flat, to be honest. We would expect it, in this case, perhaps we could come down faster. So if we didn't stay within the pitchfork, but a 5 wave move to the 1-to-1, okay, which is the previous lows here, this is that length projected from the B, would take us ever so slightly marginally lower, and that would be a pretty normal flat pattern. Okay, so what we'll just do for a moment is we'll remove this pitchfork and we'll take these pivots here and see if there's anything which lines up and fits a corrective structure better. Okay, so nothing screams to me here at all at the moment, so let's just see what kind of results we can get if we change this to a different pitchfork. Okay, see now that the shift pitchfork in the flat gives us these nice horizontal levels of support and resistance. You can see some significant play around these. Okay, so if we just remove the flat pattern for the moment, and we'll put this we'll lock these in place, and we'll put this into, what was this? Oh yes, the bullish count, looking for support. So taking the shift here, we can see a median line test here, median line test here. We can see a bunch of activity around the 50 and the 60 and the bottom of the median line here, bottom of the outer bound here as well. I mean, it's not beautiful. Let's have a look at how the modified shift would look. I don't think it's going to look any different here. Nope, it's different because the two pivots are so close to one another. They're within less than 1%, I think. Inside doesn't really offer us any insight either. So, if we just use an original pitchfork for the moment, and let's have a look at some horizontal levels. So let's just take the lows, and we know that's roughly 1 to 1. So you could come down in 5, maybe target the median line. Depends how long it's going to take. You could target the median line and the previous lows. Then you get your bounce. This is all theoretical, really, at the meantime, but I'm going to throw this in here for the moment anyway, with the flat count. Okay. And let's just bring up that long-term pitchfork for the moment. 1 to 1 should be the expectation, so I'm going to delete that and say, here's the 1 to 1 ratio. This would be a regular flat pattern, not an expanded flat pattern. So a nice sideways structure going, the C just finishing beyond the A, even by a small amount, would be enough to complete this pattern. How quickly we come down here, I don't know. But essentially, like I said, it's all about the bullish count at the moment. If you break the support we've been looking at, you break that 61% retracement, that structural support, and you just continue to move lower, then this count is starting to become more likely at that point. I can't really see an alternative from a bearish perspective. I mean, maybe a free wave move. You could argue that this could be W, X. I mean, you know, actually, you could just use the triangle, couldn't you? You could have the same ABC, 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 ABC. Right? In which case, it doesn't have to make a new low. We would still, it would be perfectly normal if it did, but it depends on what combination we're talking about here. We'd have to say a zigzag into a zigzag. Well, at that point, it looks a little peculiar to me, because the whole point of one zigzag being joined to another zigzag is to get price considerably deeper. Or because the initial zigzag wasn't deep enough, we have to have a secondary zigzag to try and get price lower. That looks a little peculiar here. So I think the flat pattern fits better, and 5 coming down at a 1 to 1 would be perfectly normal. Alright, so that's the bearish count. I'm going to stick with the bullish primary for the meantime. We'll see if we get support around here. If so, I would expect to move higher. Right, and that's gold. Let's come and have a look at silver. Okay. Bring this back up, sorry. So, bullish count. Now, I've got this with another move higher into a 5th, but I haven't brought that into line with gold. Now, why have I done that? I think it's because we're having a back test of this downward channel. We're not doing the same thing in silver as we've been doing with gold. We haven't been producing a triangle for a start, and I feel we are an entire wave behind gold. We're completing a 2, whereas gold's completing a 4. So silver has got some serious catching up to do since its lows back in March 20. So if it's only just moving into a wave 3, we have to remember that gold bottomed in 2016. That's that's 4 years before silver bottomed. So silver, if it's 4 years behind gold and doing the same thing, it will be entering its wave 3 while gold enters its wave 5, which means silver's got some serious gains ahead of it. So what I see here is a downward channel being back tested. And if I were to just take what I think is an expanding flat here for a wave 2, 1 ABC into 2, pretty extreme B wave, but it's the only way I could really make sense of it at the moment. Let's just take a base channel and run it from the top of the 1. You can see how we're also back testing this base channel. Not quite there yet, but maybe that's what we want to do. Get that 5th and final wave move up into a 1, then come back into a 2, then progress. Now it's also possible that this is the wave 1 complete, right? Same as in gold, in which case we can put the 3 and the 4 here. 4 does not overlap the 1. We can ignore the wave B, the B wave. We're allowed to go through that because that's part of the wave 2 structure, not part of the wave 1. So that could be 5 and this could be 1. That's possible as well. Similar count to gold. Okay, in terms of the initial move off of the low 1, This could be a 2 looking to come back deeply, 3, 4, 5. So far, if we take the whole move up as complete, we haven't even come back to the 50% yet. Right? So this could be A, B, C, back to the 61.8, same deal. It's possible. It's also possible that it is the 3 and the 4, we're going to push higher. So in the meantime, similar setup again. Waiting to see how this retracement plays out. Don't want to see it go too far past 50 or 61.8%. Want to see an impulsive move off of support, offer some kind of impulsive reaction, 5 up on a smaller time frame and 3 back, and that could be the beginning of the 3 and a potential trade there. Now, my personal disposition towards gold and silver is I have long-term exposure to it, have done for years, and will continue to do so. And also own some gold miners and silver miners. But in terms of setting up an initial trade, waiting for a move back and then a pop from here to set up that entry for a standard trade setup, STS, that would be what I'd be looking to trade. At the moment, not convinced that's enough, but we'll keep an eye on the price, on the how the price moves from here. Okay. So far, that looks like a zigzag. Right, you got 5 here, 3, 5. Have you had 5 here and 3 back? I'm not quite sure this is complete. Okay, we seem to be back testing this support at the moment, but that's the best I can do with it at the moment, I think. Although that feels like it wants to be, I mean, that could be 1, 2, 3, 4, 5, couldn't it? There's a multitude of ways you could count this. You could say 1, 2, 3, 4, 5. Right, so, or you could easily argue, let's just get rid of that for, oh no, sorry, we're going to need that count. 1, 2, 3, 4, 5. Now, there is some merit to this. We can see a zigzag, sharp, quick zigzag, and then we had a slow sideways flat. So this is alternation. Flat, zigzag. That could be 1, 2. Yeah, so if you did want to take the trade off of that zigzag, you're not in the worst position to do it from here. Right, let's just have a quick look at what this pivot represents from current price at the moment. So that's 2.59% risk right there. And if you wanted to, if you believed that was 5 and 3 on a smaller wave degree, then you could take that as the stop, and this would be the risk, and that is, 114 basis points at that point. I'm not convinced that's an impulse wave though, but the opportunities you see for setting something up are always there. But this could easily be, that could be 5 in a diag, actually. 1, 2, 3, 4, 5. This could be 3 and then another 5 wave move lower. So let's have a look at what our indicators are telling us and back out for a moment. Haven't come up into overbought conditions. Momentum is stronger than it has been since the highs in August 2020, but still pretty lackluster, pretty weak. The average is slowing down above the zero bound, starting to get darker readings on the histogram here. But no real strong push up. I think there could be further to go. Maybe it is that 3, 4. Okay, and we've got 1 here. Okay, so if it is the 3, 4, I know I'm going back and forth for myself here, I'm just thinking aloud. Flat, zigzag, chasing this for the 5th might not be the best idea. Waiting for a larger wave completion might make more sense. So if you're coming up in 5 more into a 5th, then you get a larger correction into a 2. Okay, but I'm not here to tell you how to trade. You trade the way you want. I mean, I follow a certain methodology which we teach on the Green Star Trading Patreon, called the standard trade setup, and we always try to manage risk. But you should do what you want to do, really. Okay, so that's the RSI and the MACD. That's our bullish count. So we do have a bearish one as well, so let's have a look at that now. Put these away inside the bullish count here. Now here's the bearish count. Now all I'm doing with this pitchfork is I'm guessing, plain and simply. Let's come back to the daytime frame for a moment. So have been expecting a 61.8% pullback the whole time in silver because it's just shallow. For a wave 2, right, it's just very shallow. It came to 38.2, I think. Let's just swap this over for the wave 4. That's the wrong one. Yeah, it came not even to the 38.2. That's log. So let's have a look at it in linear. It came to the 38.2 and slightly through it. Didn't quite make the 50. Now if we switch it back into a wave 2, we can see how in log I had that as a 61.8. The 61.8 isn't quite that deep in linear scale. Let's just click on this thing, unlock it. Now all I'm trying to do is line up the behaviour of this price action, like with something that looks right, something that fits. Yeah, so I can see, and I'm not saying this is a technical way of doing things. I like how this channels between the 38.2 and the 61.8. I like the testing of the 23.6 here. I like how this median line is being interacted with the whole time. That would have to be a very quick and severe collapse though, wouldn't it? So perhaps it's not there. Perhaps it's out here somewhere. Okay, near the end of the year. If we're going to come down deeper, perhaps it's down here at the 707, which we know is the 61.8 in log. Right, or pretty much. You see, and I'm just trying to get the price lined up in a way that I feel there's enough room for another zigzag. That's really all I'm doing. I mean, I can't, until we see 5 waves down, we can't be sure at all. So, but something like that, coming back to the 61.8, this would be a massive pivot, 1, 2, and just an absolutely amazing buying opportunity. One more move down here. One more zigzag to complete the W, X, Y, X, Z. A triple zigzag in this case. I locked all of this, unfortunately, making life difficult for myself. Okay, and this idea basically works on, this is a zigzag, this is a zigzag, and this would be a zigzag. 3 zigzags, getting the price deeper each time because each zigzag hasn't been sufficient to do so. Okay, but I think for the meantime we should just stick with the bullish count. We're in bullish territory, we're back moving higher after a significant period of consolidation. We may be done. Right, we may be done. So pullbacks treated as buying opportunities for the meantime, looking for the right setup. And long term, I've expressed my long term count in the previous video. My long term views on gold and silver are extremely bullish. It's an old fashioned idea now that when you have unlimited money printing or excessive money printing, you should always own gold, stocks and commodities under those environments. And if that has been your attitude any time over the last 12 years of the bull market, especially in equities, you've done very, very well for yourself. I think we have shifted into a commodity inflation period where commodity prices are going to continue to soar, and I think gold and silver are going to be major beneficiaries of that in the years to come. So it just makes sense that if we do have runaway inflation, as I don't think raising interest rates is possible, and I don't think it will necessarily stifle a non-demand driven inflation. I mentioned that recently as well. We're not in the position we were in the 70s or the 80s where you can ram up interest rates to 10, 12, 15, 17% in an emergency. We just can't do that today. There just isn't the slack in the system to do it. And so inflation, if it's here and it's here to stay, you're not going to be able to stop it. So you should very much get on board with it. And that's really the only thing you can do, in my opinion. So there you go. That's all I've got for you today, really. Gold and silver, bullish count, bearish count. I'm going to keep my bullish counts as my primaries. If price breaks down significantly and comes back through those significant retracements, then I'm going to start to downgrade this bullish count in favour of a longer, more long-winded correction for gold. But believe me, if it does turn out to be a flat and we get gold back down to 1650, 1640 or 1600 bucks, I'm a buyer down there, absolutely. I don't see a bearish outcome which could take it much lower, because we never had a clear 5-wave impulse, right? And even if we had, we came back to like 99%. A zigzag should look like this. So if you're going A, B, C, that's how a zigzag should look. Right, I'm not saying it can't come back to 99.9 or whatever, it's just bloody unlikely. And without a clear impulse and a clear 3-wave move back, we're left with what looks like 3 and 3. Okay, that's the bearish take, and therefore if that's the bearish take, the most obvious bearish conclusion would be 5 waves down and a flat. And therefore, if you've had 3, and you do get 5 here, that's a buy all day long. Okay. Right guys, thank you for joining me on this technical analysis of gold and silver. I hope you've enjoyed it. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave a comment in the comment section below. Thank you as always to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Click it, head over, have a read of the tiers, see if there's anything you're interested in. I would advise at this time in the month maybe leaving it till the start of next month to sign up. And if you're not following me yet on Twitter, there's a link to my Twitter feed in the description box below also, and I always announce new videos when I load them up to YouTube. Take care of yourselves guys, and I'll be back with you later in the week. All the best, bye bye.